Good morning, everyone. Thank you so much for coming today to our latest webinar, Preparing the Annual Statement. We are joined today by Patrick Charles, our Assistant Deputy Director, and Scott Henderson, our Deputy Chief Auditor. Just a few housekeeping notes for today. This webinar is being recorded, so we will post this webinar to the website in February, probably in the next couple of weeks. I will post a link to the handouts and the sample annual statement in the chat momentarily. So apologies for not getting that to you in advance. Any board members joining us live in this webinar will automatically receive your 3 credits, so you can check your Prosper account in approximately 1 week. But again, we are recording this session, so anyone who was not able to attend today can watch the webinar in a few weeks and submit a training affidavit in Prosper to get their credits that way. Questions we will take at the end. So any questions that you think of, please type them into the chat and we will get through. Actually, I take that back. Scott has agreed to be interrupted today. So you can type your questions into the chat and I will read them off as time allows, and we will try to get through as many questions as possible. And finally, we have, as always, a survey at the end of the webinar. So when we conclude the webinar, please hang on for a couple of minutes and give us your feedback so we can see what we can do to continue to improve these sessions. So with that, I will turn it over to Patrick Charles, who has a few comments. Thank you.
Good morning, everyone. Thank you for attending the annual statement, annual training. I just wanted to update you on a couple of things on our end that are important to us, but also to you. In particular, I know that everyone has seen our memo on the WEP and GPO repeal, and I'm sure that you were fielding a ton of questions. We also have been getting a large number of inquiries every day from members concerned about what they have to do and everything in order to increase their benefit or qualify for a benefit that maybe had been taken away previously because of the WEP or GPO. And we are telling them all, and we have a form email that we are sending, and we are saying the same thing on the phone to everyone. This is not something that we can really address. This is something that we need to wait for the Social Security Administration to issue guidance. And Social Security, even on their website, has a statement basically saying, be patient. They're working on figuring out how to implement this. So that is the advice that we are giving to everyone. And I just wanted to update you on that because I'm sure you are also getting questions. I think we sort of mentioned this in the memo that we sent out. We are not experts on Social Security. The boards are not experts on Social Security. Unfortunately, we have to wait for the Social Security Administration to figure out how they're going to retroactively pay people for the 2024 year, but also how they're going to pay going forward. And hopefully they will come out with some guidance in the next couple of months. That's all we can basically say at this point. The other thing is the Violent Assault Disability Act. As you know, this went into effect in October, and a couple of boards have already had some cases come forward, and we're working on those and implementing that legislation. In particular, we are revising all of our forms for the medical panel, for the treating physician statement, as well as the member application and the employer statement. We are in the final edits of that, so hopefully those will be released in the next couple of weeks, and those forms will then be available for use. If you have one that is being in process right now, you can use the original forms, and we will make that work. We've done that so far with at least one, and I think we have a second one that we know is coming in any day now. So we can work with that on individual basis, but we will be issuing the new forms. We will also be updating all of our retirement guides to reflect this new statute. Hopefully, most systems will not see one of these. That is the hope, because obviously it is a terrible situation when one of these would be, a person would be eligible for one of these. So we're hoping that it's few and far between. But we will be updating all of our guides, and also all of our regs will be updated in the coming months. As you all have known from all the times I've given presentations on regulation updates, it takes a very long time for us to update our regulations. There is a very large multi-step process and a long process. So we are working on that, but that will be months from now before we get the regs updated. The final thing I wanted to mention is 91A season is coming up quickly, where all of our disability retirees are required to fill out their 91A statements. we are going to be sending postcards, and they should be receiving postcards from us in the beginning of February, the very beginning of February. And that postcard will be advertising the fact that we are going to have the option of an electronic filing for these members, and it's a much simplified process. Last year we introduced this, and it was a little cumbersome, and it was sort of a test phase. We didn't get a lot of people actually using it. We're hoping to increase those numbers this year. So we're sending out a postcard advertising that we're going to be doing this, and that the information on how to complete the electronic filing will be on the form when it comes. Sometime at the beginning of March, they're going to get their forms this year. It's a little later, but we're doing that because we want everything mailed back to our new address, and our new address will be in effect in March at some point. So we will have access to mail there all of March, but we will physically be moving at some point during the month of March. So if someone calls and asks you about this card that they get from us, it is legitimate. We are setting up more electronic filing, so hopefully we can get some more people to submit things electronically for us, and ease their uh, issues and also ours as well with processing them, and we'll hopefully process them quicker that way. With that, I'm going to turn it over to Scott to do the annual statement training. Thank you very much.
All right. Thank you, Patrick. So welcome to annual statement training. This is about the 2024 annual statements that will be submitted in 2025. And I'm going to start with a little bit of accounting basics and what you should have been doing every single month leading up to producing the annual statement. So begin with, and yes, I know this is very basic. I'm assuming there's a lot of newish administrators attending. When you're doing your monthly accounting and you look at your trial balance, you want to match your investment assets to the manager statements that you received, or a custodial report. You get a monthly custodial report. So if you have accounts in equities or fixed income, then you're going to be posting from your custodian. If you have pooled funds, you might be getting those statements monthly. You might also be getting some manager statements quarterly. So either way, you're doing the entries when you get the statements, and you want your trial balance to match their asset value. All right, next. So obviously, besides doing the invested assets, you also have cash, and you want to pay attention to that. And I'm assuming that your treasurer is doing reconciliation, but if they're not, there's probably a board staff member doing it. So one thing to look at is, did your cash on the trial balance agree with the reconciliation bottom line amount? And if it did, no problem. If it didn't, well, let's see, what's the reason for not matching? Sometimes there are timing issues. I've seen boards who, the withheld taxes from the retiree payroll get paid to the IRS the first few days of the following month. So if that's your difference, it's going to happen every single month. It's probably fine to just live with the difference. If it's not, sorry, I haven't, let's go back to the, sorry, okay, thanks. If there are kind of one-time differences, then you probably do want to make some sort of adjustment. You're going to increase or decrease cash and try to figure out what the other half of that entry is. If there's a difference and you can't figure it out on your own, well, enlist the help of the treasurer or whoever did the reconciliation. Together, you should be able to figure something out. And then once it's explained, you can figure out, okay, I need to make an adjustment, or, well, this will happen, all the time. So it's not so bad. Okay, next. So one of the adjustments you should be making is if the reconciliation finds that there's stale outstanding checks, you can kind of get those out of the cash account. Or sorry, not out of the cash account. You're going to put them back in. So if someone hasn't cashed their check in 7 or 8 months, we'll put the money back into the bank account, but we're also going to set up an account payable. So we're debiting cash and crediting 2020 to set up the payable. And assuming the person gets a new check, figures out that they're missing their money, when you pay them again, you're going to credit cash and we'll debit 2020. So that will wipe out the payable. And if it's been sitting in payables for a while being probably 1 calendar year, I'd say it's fine to write it off. Or if the payee has died and you know you're not going to be paying it, again, you could write it off quicker in that case. So to get rid of that, you're debiting 2020 and please credit 4825 miscellaneous income because it's similar to receiving money. So that's what the miscellaneous account is for, odd things like that.
And I have a question for you, Scott. Is there a minimum amount of time before you can write off a stale check? And also, is there a process for this?
There isn't a minimum amount of time. I mean, I'd give the payee a couple months at least, try to contact them maybe twice, a couple months apart. If you're getting nowhere, if you're not even sure if they're alive, then I'd say, well, okay. I mean, I would tend to leave it in the payables for at least one December 31st. And then, in the following year, you can get rid of it if you want. I mean, if you set up a payable in February, then yeah, maybe you don't leave it till December. But any setup like July or later, I'd wait till the next year. And the process, I think, you make the entry and then you tell the person doing the reconciliation, hey, I'm, putting the money back in my account. This check isn't going to be cashed at this point. So I think it's just a lot of good communication between you and the reconciler. So I hope that answers your question. Next. Sometimes on these reconciliations, you'll see penny errors or 10-cent errors because the bank has cashed a check for the amount that it was not written for. If that happens, these are the entries you would make. If it was cashed for less, call it 4825 miscellaneous income. If it was cashed for a little more, use 5589 administrative expenses. Even if it's like $1 or $2, I would still put it in there. I don't think I've seen a bank error larger than $3. And if there are other old small variances that you're not quite sure what to do, if you're increasing cash, call it miscellaneous income. If you're decreasing cash, call it an admin expense. Just to try to clear up the monthly reconciliation so you're not carrying 15 to 20 reconciling items month after month after month.
One more question. Why wouldn't you offset the account that was debited on the write-off?
I think if you are doing the write-off in the same year that you issue the check, it's okay to offset the account. I think once we get into a new year, some of these accounts you try to reconcile to another report, and I don't want to create problems with that reconciliation. So if it's a following year, I would use a different account. Same year, you can use the same account. All right, next. Retiree payroll can cause a lot of problems. Either retiree deaths or people closing their bank accounts. I would say if you're doing the monthly accounting, just enter gross amounts. Don't enter net, and then try to enter several end checks, each with their own entry. And if you have a disability retiree who over-earned from Section 91A and you're withholding monthly payments and it's coming back as a check to you, just please make sure that money gets booked to 4841. That account is for tracking the 91A collections. So let's say you did have a retiree whose direct deposit bounced back. The next slide will show what the accounting entries are when that happens. So it's already been posted in the retiree payroll accounts. So 57, 50, 51, and 52 are annuities, pensions, and COLAs paid. So this is kind of close to writing off the stale checks. First, we want to add the money back into the bank account because it's come back to you. So we're debiting cash and we're setting up a payable. And then when you get the new bank account info and you pay it out, just debit 2020 and credit cash. So the pensions and annuities paid won't change because they're really the same. You just want the check in and out to be reflected in your books. All right, I'm going to talk about the supplemental schedule a little bit now, and then I'm going to talk about it a little more towards the end of the presentation here. But first, what is the supplemental schedule? I'm assuming everyone's seen it. It's got all your members who have money in the annuity savings fund. So active people as well as inactive people who haven't taken a refund, died, or retired. So it can be quite long. The beginning balance is what you start the year with, should match the ending balance from the prior year. Then there's things showing the activity where money comes in or goes out, as well as columns for if you've done fund-to-fund transfers to put money in or out of the annuity savings fund interest. There's a column for interest, and then there's an ending balance taking all those into account. The next. The supplemental schedule, it's a good idea to try to do a little bit of a reconciliation as you go through the year. Some people will do it monthly. I'd say at least do it quarterly. And when you're checking the columns, just keep in mind that a couple of them could be more than one account. Another thing to make sure of is when your people retire or take a refund or transfer out, the ending balance on the schedule should be 0. So sometimes you'll see people who have like $30 or $40 because there was one deduction after the refund or transfer. Just that's something to look out for, and pretty easy to clean up. The schedule's grand total, you won't see the grand total anywhere until your year's accounting is finished. So you just stick with the individual columns when you're trying to reconcile. And so month after month, you're doing the accounting, you're sending it in to us. We get a trial balance, receipts, disbursements, adjusting journal entries. And we just added the monthly general ledger as a new requirement recently. And we do have a chart now that shows the dates that the monthly submissions are due. So you can look at our regulations. It's 840 CMR 4.0. Somewhere in 4 that has the actual chart. And next.
I have a couple of questions for you.
Oh, okay.
What is the best practice for accounts more than 10 years old? Is moving to pension reserves still preferred? It seems less member friendly.
Well, the part of the statute that tells you to move the 10-year inactives is still there, so I guess I'm going to tell you to follow the statute. And we'll get to a slide on them a little later, but yeah, I'm not going to tell you not to do it. So,
And someone asked about downloading the handouts. if you hover towards the top of your screen, you should get the Zoom navigation where you can click on the chat panel and see if you can get to the handouts there. Because I guess if it's in full screen modes, users are having trouble downloading the handouts. That was the last question. Thank you. I'll go to the next.
Okay. If you're curious what the cash book analysts do when they get your accounting, here's what it is. So they're just keeping a running total of debits and credits for the year. They take the current month's debits and credits from receipts, disbursements, and adjustments. They add the current month to what the total had been the month before. Then they look at your trial balance to see if the current month's trial balance has the same amount for debits and credits as what their sheet does when they took the prior month and added the current month for it. It sounds like it should always work out, but if it isn't working, one of them will reach out to you. And usually what happened is you might revise an older entry without resubmitting new cash books, or even add a brand new entry in a prior month. But if you don't submit new cash books for that month, we're not going to know that entry was made. And so our debit and credit total won't match yours. So that's what we do with them. Next. Summary here of memo number 24 from 2014, because that memo is about correcting errors in the records. And we basically say, do not correct old accounting, just fix all your problems in the month that you are currently working on.
I have two more comments. Well, one comment, one question. Be mindful that if you move the account to the pension reserves, you most likely will not have the members' info for board member elections. And then a question, aren't we supposed to do our own cash book balance recon before submitting to PERAC?
With the inactive, oh yeah, I guess that's a good point. The inactive people, they do get to vote, don't they? Yeah. So yeah, maybe you lose them, but yeah. I'm not sure what your software does and doesn't show for people who have been transferred to the pension reserve. What was the other one? Should the individual boards?
Aren't we supposed to do our own cash book balance recon before submitting to PERAC?
Well, it doesn't hurt to. I yeah. I guess part of the reason for mentioning it is, yeah, it is something for you to check. But it's generally, as long as you don't do an entry that's backdated a few months, it shouldn't be a problem. I think the worst case I've ever seen, someone actually put the wrong year. So they had the right month and day, but it now was the year before, and that threw off tons of stuff. But yeah, I mean, if you check your own work, I guess you would catch it. But I guess I'd say historically, has your accounting been fine, or have you had a few months where this has happened? Because it's more important, if there have been issues popping up, that you do check them before submitting them. But I don't want to tread too much on the investment people's area. All right, so late manager statements. This is up here because if you invest in stuff like real estate or private equity, then those managers, they'll get you quarterly statements, but you won't get like second quarter statements at the same time you get second quarter statements for equities or fixed income. So it's kind of industry standard that those statements are delayed. Don't hold up your accounting waiting for them. Just make the entries when you do finally get the statements. There are plenty of alternative investments where the December 31st annual statement is showing a September 30th asset value. That's fine. All right, next. Next.
One more question. I'm sorry, Scott.
Okay.
What if my board wants me to wait for statements on alternatives?
I guess are you talking just year end or monthly? I, I still think it's better to submit the accounting on time if you're gonna, if you wait 3 months just for one statement, you're gonna be getting late notices and eventually the chairman starts getting late notices too. I wouldn't recommend waiting for all them to come in. Maybe for December 31st, but you do still have to get the annual statement in by May 1st. So keep that in mind too. I mean, I'd say to try to accommodate the board if you can, but you don't want to be submitting late. Um, have each quarterly set of accounting be late, I guess.
And I have one comment. I think this was for a couple of slides back. If they could share their worksheet with us, we could do it before submitting.
Well, yeah, I mean, their worksheet is it's a spreadsheet. So if you took the prior month's trial balance, get the total debits and credits, add the credits from the receipts, add the debits from the disbursements, and then debits and credits from the journal entries. See if that matches your trial balance. I think theirs is not quite that simple, but if you want to do a basic spreadsheet, because they also get into calculating the return and all that I don't think you guys need to see.
For the cash book worksheets, admins can reach out to PERAC investment analysts and ask for the worksheet.
Yeah, yes, that'll work. I'm sure if something doesn't match, they're more than happy to show you, here's our numbers to try to figure out what happened. If the difference is $12,000 and there's an entry a little wacky for $12,000, then right, it's easier to correct it and move forward. All right, so you've done your monthly accounting January through November. Now we're in December where you do the usual receipts and disbursements and check to see if you have to set up any accounts receivable or accounts payable. Common receivables are money that member contributions that were withheld in December, but the check doesn't get to you until January. Another common receivable is appropriation payments. If in the current fiscal year that you're in, there's still money owed that will be paid between January and June, you can set up a receivable for that. And then payables, basically your December bills that you will be paying in January. There's probably some investment ones too, like fourth quarter management fees get paid in January. You could accrue those. All right, next. And the next couple slides are going to go over entries that you just make once per year. So if we go to the next slide, because each of these has their own slide. And so your stocks and bonds, the unrealized gains and the unrealized losses, and this is for when your investment is not a pooled fund. So you have your own separate account and you get a custodial report, and yeah, it's just you investing in them. I would say you don't want to post from the custodian summary sheet. I know it's convenient and it's got one number there, but just because it's a net number for the unrealized gains and losses. So you really want to post both the unrealized gains and the unrealized losses separately. You can find them inside the report, or you can, if this custodian has sent you schedules 3A and 4A, just go to the bottom of the schedule. You'll see total increases, total decreases, and post from there. So a couple interfund transfers, the pension reserve fund to the pension fund. This is done so that the annual statement isn't showing a negative value in the pension fund. So if you're looking at your trial balance, the pension fund should be either a credit, which is a negative number on the trial balance, or zero. If you do have a negative pension fund, just transfer enough in to get it up to zero. I know they stopped, the appropriation letters used to show how much to transfer, they don't anymore. So you can either get it to zero or ask John Borak how much you can transfer. He'll give you an amount big enough you'll never have to transfer anymore the rest of your career. And then the non-vested inactive people for 10 years, we've already had a couple of questions about them, but like I said, it's still in chapter 32 that you do it. So it's in section 11.3. And this is for non-vested people only. So they worked for a year or two, or well, less than 10, and went somewhere else, but left their money in and have been gone for 10 years. Next.
One more question. Is PERAC considering valuing for custodian accounts monthly versus only annually?
I think we once in a while there's a discussion about that. We obviously haven't changed it yet, but it comes up from time to time, and maybe it will eventually be changed, but yeah, it's discussed, just hasn't changed yet. Now let's talk about interest due and accrued for a little bit. First thing to do is figure out if you have interest due and accrued. So if you've got schedule 3A, you definitely have it. 3A is fixed income owned at the end of the year. So if you have bond managers, there'll be bond income that you'll get the next year. It might also be on schedule 1 and 2A. Look at what the custodian sent you for those two. There is an interest due and accrued column on each of them. So next, we'll go over what happens if you do have a number there. So if there's already money sitting in interest due and accrued, 1550, that account has just had that same number for the whole year. Now it's time to get rid of it in December. So to get rid of last year's, you debit 4820 and credit 1550. And then to put in the new one, you're going to debit 1550 and credit 4820. And the next slide goes over what 4820 is, because you haven't hopefully you haven't done any entries to that account yet during the year. It's the investment income control account. So all of the gains and losses and income, when we close out the year, they go there. And then the interest income that gets dispersed to a bunch of the different funds comes out of 4820. The following year, when you get the interest that was due to you, book it to 4821. So if you booked it to 4821 as part of the annual statement process, you'd throw off the schedule equaling the annual statement. So this is why we use 4820. You've done all that. So now your trial balance is what we refer to as the pre-close trial balance. And for the receipts and disbursements, these are the numbers that will show up on the annual statement, the ending balance. For the fund balances, the accounts in the 3000s, we're not quite there yet for annual statement numbers. Next. When you hear people talk about closing the books, what do they mean? Well, they mean your receipts and disbursements, which have account numbers in the 4000s and the 5000s. They get the money in there gets put into one of the 6 funds. If you look at the trial balance, they start the year at 0, then they have a non-zero number. Well, a lot of them have a non-zero number at the end of December. So to get it back to 0 to start the new year, we're going to take the amount and put it into one of the funds. So, for example, member deductions goes into the annuity savings fund. So that's what the closing process is. And once the closing process is done, you print out a new trial balance, and that's the post-close trial balance. So the 3000s accounts, the funds, they now have what's going to show up on the annual statement. And everything under the 3000s, so the 4 and 5000, should be 0 at the end of the year on your post-close trial balance. All right, now that all that background info is out of the way, you can start putting together your annual statement, and we'll talk about what it looks like, though nothing has changed for 2024. And if you want to, the website has 2 annual statements on it. One is completely blank, the 2024 annual statement. The sample annual statement doesn't have any numbers in it, but it does show where where the cross references are. So if things on the receipts page match one of the schedules or even on the like the investment income page, it's all the places where the numbers should be the same if you want to see what should equal what. And so the first page is the balance test. There's 3 different tests. We're just adding and subtracting stuff, a couple different numbers, but they should all end at the same amount. Basically, the ins and outs of the year, and the difference between them should be the same for all 3.
Scott, are the Excel sheets finalized? Or when are you getting to that?
This year's schedules, I believe they're finalized. Yeah. And so your balance tests, what do you do if your balance tests do not have the same result? So a couple of things to look for are get the post-close trial balance. Did one of your accounts that should end in 0 not end in 0? If one of your balance tests is $1,000 off and you have an account that ended in $1,000 instead of 0, there was your problem. Is the investment income breakdown entered correctly? Just make sure when you break 4821 up into the asset, the cash income, the pooled fund income, just make sure you type in the right numbers. So total 4821 matches your ledger's closing entry. Another thing that could go wrong is if you put something in the wrong, not just the wrong account, but an account that doesn't exist. So there's some sort of typo. And if you used 5303 instead of 5304, that management fee is going to just sort of disappear when you get to producing the annual statement. So look for that. And on the next slide, we'll go over what's probably the most common reason the balance tests don't match is if you do an entry where one side is a fund, then the other side has to also be a fund. So during the year, you can only do fund-to-fund transfers. So I'll show you what not to do on the next slide. All right, let's say you're new and you're looking at your accounts receivable and there's $1,000 that you just can't figure out what it is, when it was accounted for. You know, you've looked back 5 or 6 years, you don't see an entry setting it up. So you're at this point, you're not going to collect it. You're safe to write it off. So what you should not do is say, well, the $1,000 is going into the pension reserve fund, so I'll debit 3297 and credit 1398. No, you don't do that. Because if you're using a fund, again, the other half of the entry has to be a fund. So you do need to credit 1398 to get rid of the receivable. So you debit 5589 admin expenses. Don't debit the fund. Similarly, if you're paying out refunds and you just didn't book interest that wasn't refunded, you don't want to credit 4822 and debit the annuity savings fund. So the way to handle that is you credit 4822 and debit refunds. So just whenever you have a 3,000 account in your entry, the other half has to be in the 3,000s. The second page of the annual statement is the assets and liabilities. So the top part shows your assets by investment class. So cash, short term, then all the pooled funds, PRIT, etc. And the bottom half is the fund balances. So those two totals should match each other. Page 3 of the annual statement is showing by fund what happened in the last year. So up at the top, there's the 6 funds are in a column, and then you get receipts, disbursements, interfund transfers, and starting and ending balances. Underneath that chart, there's a space to put the interfund transfers. So you want to put them each in there individually. And when we look at the top half with the interfund transfers for each fund, those should match what's down below. And the next couple pages, we have a page of receipts, a page of disbursements, and a page of investment income. So the numbers on those pages should all match your closing entries from the ledger. There's a page with membership count. So it's broken up by group, 1, 2, 4, and it just shows, how many new actives there were, how many actives retired, how many retirees died, etc. This page is Schedule A. So when you've set up payables and receivables, you also put them here by account number. And we do want them to be dated, just so, we know that if there's any 3 or 4-year-old ones, because then it starts getting into, well, are you actually going to receive them? If you do set up a buyback receivable for the date, put 12/31/2024. The payables are the bottom half. Again, just date them. And if you need to set up a payable or receivable for an account that isn't in the list of numbers, use the investment section because that has blank rows. So if you need to set up a receivable and you want to use 5751, the pension's paid, just put it yeah, on one of the blank rows. So. And there are also financial schedules, 1 through 7, that get kind of attached to the annual statement. They show what happened through the years investment wise, and a lot of the numbers should match the front part of the annual statement. Don't worry about having to create schedules 2, 3, and 4 yourself. A custodian will send you those. Now, Schedule 1, it's both you and a custodian, because there will be custodial cash or cash associated with investment managers that the custodian tracks. So those show up on Schedule 1. But you also want to put your own local bank accounts on Schedule 1 as well. And then Schedules 5, 6, and 7 should just be board staff putting them together. And so talking about things where numbers should match within your annual statement, if you want to self-review, the asset and liability page, there's a market value column on all the schedules. So Schedule 1 is cash, so that should match your asset liability cash. Schedule 2 is the short-term investments. 3 is fixed income. 4 is equities, and Schedule 5 is for pooled funds. And they're really like 3 and 4, they're really 3A and 4A, because those are the your currently held assets. The investment income page. So when we review your annual statements, the gains and losses and the income are where we see a lot of numbers not matching. So investment income comes from a lot of different schedules. The gains and losses also come from a bunch. So if a schedule ends in a C, that is the assets that you sold. So the ones in C are realized gains or realized losses. If it ends in an A, those are the ones you're holding at the end of the year. So those are unrealized gains or unrealized losses, because you're just still holding the asset. Schedule 5 has all those, because that's where the pooled fund activity is completely. All right, next.
Scott, is the audit unit going to provide the checklist that the staff uses for the boards to use as well?
I know we keep talking about that, but we haven't really I guess again, it's something we'll think about. And if you're really having trouble, we'll probably forward it to you if you want it. But I don't think we plan on just putting it out there. And we're actually working, it won't happen this year, but in the future, Prosper, we're hoping we'll be able to do the analysis as kind of as you once you submit it. I don't know what the end result will look like when it's done, but if you want to do your own analysis, you can take the sample annual statement on our website and see what numbers should match. And then if you take the slides that we kind of just went through, that will cover a lot of what we check. The Schedule 7 is all the investment fees. So besides being on Schedule 7, they're on the disbursements page, management fees, custodian fees, and consultant fees. There's a note here about Schedule 5. Schedule 5 has a column for fees, but don't worry if your Schedule 5 fees don't match Schedule 7. If you are paying your fees in a separate check to a pooled fund manager, then just put a 0 for your Schedule 5 fees. But Schedule 7 still has to have the actual fee paid on it. The investment income page has those other alternative fees that come up, the carried interest and the miscellaneous fees. Equalization expense if you have that. Schedule 6 typically has no new info on it. It's just schedules 1 through 5 summarized in one place. And another thing we see a lot on the disbursements page, if 5751 has like a grand total at the top or a big number at the top above the regular pension payment number, make sure that that big number at the top matches the sum of the breakdown. So the regular pension, which is the superannuation, and the disabilities and the survivor payments, those two numbers should match, hopefully. And now we're going to return to the supplemental schedule for a number of slides. If you're wondering what the cutoff is for what deductions are included and what deductions are not, go by the date of payment or the pay date. So anything paid in 2024 should be on the 2024 supplemental schedule. Anything paid in 2025 will be on next year's schedule. So even if your first check in 25 includes the weeks in 24, it's still held off until the following year. So that's how you determine what to include there. And there are a few different options for like viewing the supplemental schedule. But as you're trying to reconcile additions, if they aren't in their own column, 4891 is deductions, 92 transfers in, 93 is the makeups, and 4900 is makeups if they were rolled over. And then the next slide, we have the reductions. So if people who took a refund or people who transferred out, your refunds, you might need to take the extra step of taking interest not refunded into account. So if your refund is $1,000 different from the ledger, but 4822 is $1,000, you're good. Right, and next I think we get into the the other column. The interest column, you won't see an accounting entry for the interest. It's done as part of the year-end close, so it's not something you're reconciling through the year. You can check it at the very end of the year after things have been closed. The transfer to annuity reserve column, these are all your retirees. Their money goes out of annuity savings into annuity reserve. And if you have someone coming back either from disability or Section 105, this will be a negative number on your supplemental schedule. The transfer to pension fund column, you're not going to use very often. The two situations I could come up with are one where someone dies with no spouse, but there's dependents. So you're going to pay a Section 12B to the guardian of the dependents until they age out. The other situation using the pension fund is if someone's on workers' compensation and you're going to do the deduction that Section 14 talks about. But you only do that Section 14 transfer if it's going to increase someone's allowance. So you don't do it for superannuations. For disability, if they're already at the 75% cap, you don't need to do it. So it's really like short service people who go out on disability and have workers' comp that you might have to do it. And because this is money coming from the pension fund into the annuity savings, it's a negative number if you have to do this workers' comp thing. The transfer to pension reserve column, So this has a couple different things in it. The 4822 interest not refunded, people will be in here. So if they hit the 2-year interest limit, or you had someone who lost their interest because of Section 15, then they have money, or they have an entry in 4822. Another thing that happens is a disability retiree who finally made it all the way through the process and their retirement date is going back 2 or 3 years. You have to get rid of the extra interest that they've accumulated while sitting in, or sitting on the supplemental schedule. So just move that into the pension reserve. And again, those 10-year inactives that no one wants to do. If you do have a 10-year inactive coming back because you're going to issue a refund or transfer to another board, then that's a negative number on the schedule. And the final column, the current year balance. So after you've done the post close, look at 3293, your annuity savings fund. The number should match the supplemental schedule ending balance. If you have a receivable for service purchases, then you kind of have to manually add that number. So the last part of this presentation, we're going to go through putting it into Prosper. If Karen Shea was here, she'd be doing this. But so first thing you'll notice, if you did submit it last year, we've added 2 more things to the required documents. So we still have the annual statement, the schedule, schedules 1 through 7, the sub-schedule, the accounting. Accounting close interest is basically the annuity reserve fund interest calculation. Now we've added the post-close December trial balance, and we've added post-close January to December general ledger. We are showing up for a lot of audits now, and I know the audit is going years back, but people won't have a January to December post-close ledger, and they'll tell us it wasn't required to save it, so now we're requiring it. Everything should be readable PDF. Basically, that means don't print it out and scan it, because if you print it out and scan it, it's not going to be a readable PDF. So if you just create it and produce it and forward what spit right out of the software, that'll be readable. We're asking for readable because eventually we want Prosper to be able to do the review. So for it to pull the numbers off of what you submit, it all has to be readable. Then we also have an area for investors and consultants. So if you have 30 managers, you can send us the manager list separate. That's a readable PDF. And there's like a miscellaneous option too if you want to send us something else that is needed. All right, so schedules 1 through 7, do's and don'ts. So yeah, when the person asked about the Excel, I assume this is what they were talking about. So we do have the schedule 1 to 7 template ready for downloading in Prosper. We're asking that you download a new one every single year. Don't reuse last year's. We do run into cases where some of last year's numbers are still on the one you submit this year, so please don't do that. Don't make any changes like adding columns or tabs to the template. If there's some really bizarre situation and you feel like you do need another column, contact us, and contact Karen Shea. She'll tell you what to do. So things like schedules 3 and 4, just take your custodian's copy and paste into the template. We do have formula columns. We're asking you don't paste into the formula columns, just leave those, because that'll tell us or tell you if you've pasted correctly, if totals match. So the formula columns are in gray, so they should stand right out. Okay, next. If you're not going to make it by the May 1st, 2025 deadline, Tell Bill Keefe, our new director, and Karen Shea. We do ask that you tell us why, what's holding you up, and also try to estimate when you'll be able to send it to us. So. Okay, a couple slides on what you'll see after you submit it to us. So we're looking at these and we're checking that the numbers that should match do match. If the annual statement is under review, we're looking at it, and if we have questions or comments, we'll put them in the notes section in Prosper. So you can see those and you get an email. And we're asking that you make the corrections or submit a new one. Answers can be put in the notes section. You can resubmit it. The board members do not need to sign off again if you're resubmitting. So yeah, next slide. So then it goes to submitted. The auditor will check it again, and it will go from under review to final review. Final review is just a senior auditor looks at it, and if it's okay, then it goes to completed. If the senior auditor doesn't like what they see, then it's going back to the auditor who did it to ask you guys something, and it's back under review, and the process just continues until it eventually gets put into completed. So if you're looking at a 2023 statement in Prosper and it's not in completed, if it's under review, we're probably waiting for you to respond either to a question or to submit something new. So try to see if you notice something like that, because we can't really do anything once it's under review and we're waiting for you. The ball is in your court. So I think that's it.
Okay, I have a couple of questions for you. I have a request from one of our attendees. If you can please go over slide 15 one more time, if you don't mind. And that's
Okay.
the end of the yearly accounting cycle. And I have it up here again on the screen.
Yep. Oh, you got it. Okay. Yeah. So the point of this slide was just to kind of isolate things that only happen at the end of the year. So it's once a year, not things that you did, January to November. So the first bullet is non-pooled investments. If you're in PRIT or you only have pooled funds, then you've been doing unrealized gains and unrealized losses throughout the year based on your pooled fund manager statements. So this is just for people or your managers who are stocks and bonds where you're not in a pooled account, you have your own separate account, and the custodian is tracking all the buys and sells. Then it's a December 31st entry for the unrealized gains and the unrealized losses. The interfund transfers that you do once a year, a negative pension fund. And unfortunately, you might not know you have a negative pension fund until you've produced the annual statement and then you see it, it's negative $1 million. But if you catch that you have a negative pension fund, you just do a December 31st entry to put money from pension reserve fund into the pension fund, at least burn it up to zero. Don't leave it negative. The 10-year inactives, those are the people who left 10 or more years ago, and they're not deferring retirement. They're just, gone and leaving their money in. And also interest due and accrued if if you do have that, if you had it last year, get rid of last year's at the end of the year, and then make a new entry for you have this year.
Okay. And so I have a couple of questions in the Q&A. When the annual statement is uploaded in Prosper, do board members get a notification from Prosper to sign the annual statement?
I don't know if they get a notification or if they have to go in. I think when they go into like their opening screen, they can see that they have to sign off. I don't know that they get like a separate email telling them it's ready.
But it will be in their to-do list.
Yes,
Okay.
I
And
think
how
so.
long after the annual statement does the administrator, executive director get notified that it is completed and correct?
Um, Yeah, I mean, we don't review them really quickly, obviously. Um, I guess with under review, if you haven't heard from us and it's under review, you know that we're looking at it. Same thing with final review. Then it's if you don't get any questions and you see it's under final review, it's nearly through the process. But yeah, I guess you wouldn't know until you see it as completed. But for the timing of that, it's not we don't look at them all in a month or two. It takes a little time.
Should we be submitting investment manager statements monthly or quarterly through Prosper?
However you get them, I believe the cash book side, they've setting it up so that quarterly managers only need to be put in quarterly. They're not going to ask for a monthly one if they know it's quarterly. Hope that helps. Yeah.
We had a request here that I will advise IT of this request. It says, can you change the process so board members are notified to go in and sign the annual statement? So that would be an enhancement in Prosper, and I would have to let the developers know, and they can see if they can make this happen.
Yeah. Yeah, and maybe I don't know the Prosper process 100%, so maybe they are getting an email. But I guess if they didn't get an email last year telling them it's ready, they won't get the one this year. So whatever happened last year will be the same. And on the manager submittal with the cash books, I'm not even sure if that's set up for 24 or if that's something that's coming in 25. You guys would probably know better than me, but anyway.
And I got a request for a link to the annual statement schedule template. I believe that's in Prosper, not something that we put on the website. Right, Scott?
Right. The Excel pages are in Prosper. If you just want to see what the template looks like, it's part of the annual statement and the sample annual statement. Those booklets have the front and the schedules, but the actual Excel sheets are in Prosper.
And I was just advised that investment manager statements will be rolling out soon in Prosper.
Okay,
We'll let you know when that rolls out.
Right, yeah. So it's coming in 2025, but it will be set up to handle both monthly and quarterly.
Okay, and I think that is it. Again, another comment about the board members getting notified. So I will definitely bring that up with the developers to see if they can. They're working on a lot
Okay.
of enhancements, but
Yeah.
I'll point this out to them.
Yeah, and
Uh,
we do worry about burying people under an avalanche of emails, but
mhm,
I assume if enough people want it, then it'll happen.
right. Okay, and I don't see any other questions. So let's open my video so we can close this out. Thank you, Scott, for the presentation. And for going through all the points with submitting the annual statements, as Scott pointed out. Oh, no, we have one more. Should the approval of the annual statement go on the agenda and be voted on?
Yes. Yeah, even though they're still not physically signing it, they should still vote to approve it.
Thank you. That was a great question. So now I will close it out. Again, thank you, Scott, for the presentation. As a reminder, the annual statements are due on May 1st. If you are not going to make or don't believe you will make that deadline, please let us know and request an extension prior to May 1st. As I mentioned before, this webinar is being recorded, so any board members or other staff who need to see this, we will post it onto our website in February, probably in about 2 weeks. The handouts are available already on our website on the event page for this, but I will add it to the education section as well. Actually, it's already on the education section and under the handouts. You'll see your credits in a couple of weeks. And again, once this webinar closes, we will have a brief survey and we would appreciate your feedback. So thank you so much for giving us some comments and some notes on what we should do next and offer next for education. With that, stay warm and have a great rest of your day.
All right.
Thank you.
Bye.